Alright, again, we have to think differently about choosing a product. Okay? As far as choosing a product, our main goal is to get that borrower the most amount of money to last them the rest of their lifetime. Okay? It's not getting them the best payment, the best interest rate. It's about getting them the maximum amount of money to last them the rest of their life. For instance, one of our products may have a 6 3/4 rate. Right? One of them, the FHA product right now, is under 4%. All right, that's a really low rate. But the cash account rate is on $50,000 more dollars. What do you want, a 4% rate, or do you want $50,000? So we have to really look at the product pick a lot differently than what we're used to looking at. The other thing is, how does that senior need to receive their funds? What are their needs presently and in the future? Do they need to pay off some debt? Do they need a monthly supplement to their income? So disbursement options is very important when we're picking a product. And the last thing is cost versus benefit. You'll see and hear that the cash account usually has the lowest closing cost, the HECM usually the higher. One of the reasons is maximum claim amount. A couple of new terms here that you have to get used to when you're talking about reverse mortgage. The maximum claim amount is the lesser of the home's value or the FHA set county lending limit. All right, so here in the Dallas area, really in Texas, it's $200,160. So if my home is worth $300,000, my FHA county lending limit is $200,000. Then $200,000 would be my maximum claim amount. It's the lesser of the two. Same thing with Fannie Mae, the national conforming limit of $417, which is seeking for reverse. Or the home value, whichever is less, that will be your maximum claim amount. Okay, does that make sense? Okay. Principal loan limit is really the limit that the borrower qualifies for. So the way I remember that and teach people how to remember that is the principal loan limit, the limit they qualify for. The maximum claim amount, interest rate, where they live, all that plays into how old they are, plays into the principal loan limit. All right, I mentioned disbursement options. There are various disbursement options. They are specific to product that HECM has the most. It offers a tenure payment, which is basically as long as that senior lives in the home, they can receive a monthly payment. So if they live in that home, they live to be 150 years old, they'll still receive a monthly payment. Okay? The term payment is something specific. How many months can I receive X number of dollars, or I need X number of dollars for so many months. All right, so a term is something very specific that they pick up. They can open up a line of credit that they can call on anytime they need it. All right. For the HECM product, the unused portion will increase annually. Right, so they'll get an increase on that unused portion of that credit line as they grow older, and as they don't use it, they'll have access to more funds. Okay. We also offer a lump sum cash at closing, or a combination of any of that. They can take a $50,000 lump sum at closing to pay off some debt. They can open up a $50,000 credit line to call on when they need it, and use the other $50,000 or whatever the scenario is to take monthly payments. So it's very flexible. After they set it up, they can call and change those payment options at any time as long as the funds are still available. Okay? As far as the homekeeper goes, it offers a tenure payment. It does not offer the term payment. The line of credit on the homekeeper, the unused portion does not grow. They can take a lump sum or a combination. Okay? The cash account offers the lump sum. The line of credit for the cash account, the unused portion grows just like the HECM. If they want a monthly payment, we can use the credit line to draw monthly payments off of, or however if they want a quarterly, once a year, we can draw those off of the credit line. Okay? The two governments, the FHA and the Fannie Mae, are very standard. Okay? The cash account is our proprietary jumbo product. Right. And I'm going to talk about those actually here real quick. I mentioned that in the HECM product, we have the FHA approved to fully originate that. If you're not, you can still take that lead you have, fill out a couple of disclosures, send it over to us. We'll do the heavy lifting, and you make 25% of the borrower paid origination fee. Right? You don't have to take an application, you don't have to order title process or anything like that. So if you're not FHA approved, you can still earn a little bit of money for doing a little bit of work and not, referring that borrower out. They can't have any qualifying mortgage debt or any other governmental debt, whether it's student loans, another FHA product, or anything like that. Mortgage insurance is required. Now, I mentioned that the closing costs are very high for the heck of it. Okay, you're going to hear that. You're going to see it as you get into reverse. The reason why is our MIP charge is charged against the maximum claim amount. So you got a 2% charge against that maximum claim amount. So let's say my county lending limit of $200,000 is my max claim. I'm going to charge $4,000 in MIP, 2% of that $200,000. All right. Origination is the same way. It goes against the maximum